In today's video guide, you are going to learn support and resistance trading strategy. In this video, you are going to learn how to be able to identify support and resistance level on a price chart. You'll be able to know which ones are major key levels and which ones are minor key levels. So you are going to learn a lot about support and resistance level in this video. So my advice for you guys is to make sure you watch this video from the beginning to the end. Do not skip any, so that you will understand what this video is talking about. This is an in-depth guide on support and resistance trading strategy for beginners to advanced level. So once you master this strategy, you'll be able to make money consistently in the forex market. You'll be profitable most of the time in the forex market. So you need this knowledge for you to be able to excel in forex trading. So have it at the back of your mind that this strategy works in all markets, not only forex. It also works in crypto. It also works in stocks, indices, and also binary option. So this is a branch of price action, and like I told you, price action works in every market. You can also use it on any time frame that you want to, whether 1 hour, 4 hour, 15 minutes, 30 minutes. You can use it in any time frame that you truly want. So before we start, what is support and resistance level? Support and resistance level is a foundation. Support and resistance level are foundation of all technical analysis, because every traders always look for an area where they are expected to place their trade, and that is where support and resistance level comes into place. So now the question is, what is support and resistance? But before we delve straight into the main video, I want to give you a recap of what this video will be talking about, a summary of what you are going to learn in today's video. First, we are going to look at what support and resistance is, the meaning of support and resistance. Then after that, we're going to look at the secret rules of support and resistance level. When we look at that, we also look at some trading examples on how to use this strategy so as to make money in the forex market consistently. So now let's start with the first one. What is support and resistance? Support and resistance are terms for two respective levels on a price chart that appears to limit the market range of movement. That is to say, support and resistance is where price regularly stops falling and rising, right? Because when a market moves, it normally pauses and reverse. So market doesn't go up all the time, market doesn't go down all the time. Market always pause, right? To do what? To form a balance and imbalance. So support and resistance level gives price action traders a clue of what the market is going to do. So a support level is where the price regularly stops falling and bounce back up, while a resistance level is where the price normally stop rising and dip back down. So resistance level is like a ceiling that cannot penetrate. That is why whenever price comes there, it gets rejected. While support level is like a floor that cannot be penetrated. Whenever price comes there, it gets rejected. So that now brings us to the two types of support and resistance. We have the bounce and the breakout. So when you are trading using support and resistance, there are two things you are trading. You are trading either the bounce or the breakout. So when you are trading the bounce, you are trading the bounce in the sense that the resistance level or the support level is still strong and is still holding on to the price. So whenever price comes to the resistance level, you take a sell trade, and whenever price comes to the support level, you take a buy trade. So that forms the bounce. So when we talk of the break is when price breaks above a resistance level or when price breaks below a support level. So when price breaks above a resistance level, that resistance level will automatically become a support level, because each time price breaks above a resistance level, the price will normally come back to retest that level before it continue going higher. So when the price now makes a retracement back to that level, that resistance level, which has automatically become a support level, the price tends to test that level and continue going up. So that level now becomes what? An area of value. So now buyers are now looking at that level to place their buy trade. But if price breaks below a support level, that support level automatically becomes a resistance level, because when price breaks below a support level, no matter the distance that price travel, it will definitely retrace back to test that level. So once the price tests that level, that support level will now automatically become what? A resistance level, and that is where sellers are looking to take their sell trade. So you see the concept behind support and resistance level. So support and resistance level have comparison with demand and supply. They are almost the same, right? They have the same comparison. So the only difference between supply and demand with support and resistance is that supply and demand is a fresh level, right? You are looking at a fresh level, but in support and resistance, you are looking at levels that have already happened. So that takes us to the next rule. For support and resistance level to be confirmed, there must be multiple touches or multiple rejection, right? Because for you to be able to identify either support or resistance level, the price must go up or go down. There must be a trend before those levels can be formed. So if a market is in an uptrend, right? If the market is going up and then gets to a particular level and reverse and start dipping down, that level that the price reversed from becomes a resistance level. And if a price dips down and get to a level and reverse and start heading up, that level that the price reversed from becomes a support level. So that is what we call the swing high and the swing low. So that up level becomes a swing high, the low level becomes a swing low. So now, what makes that level strong? What makes that level strong is if the price now heads up and gets to that level again and then get rejected and start heading down, that level becomes a strong level, right? So if the price was formerly in an uptrend and then reverse and start heading down, the level where the price reversed from becomes a resistance level. And if the price dip down and reverse and start heading up, the level where the price reversed from becomes a support level. Now, if the price now goes back up to that same level that it came from, and instead of breaking above it, it now reverses back from that level and start heading down, that now becomes a strong resistance level. And if the price now dips down and gets to that same level that it reversed from, so unable to break below it, instead price reverse from that level and start heading up, that level becomes a strong support level. So once the price continue doing this multiple times, it becomes a strong support and resistance level. So what is there is that one day the price will definitely break. So once the price eventually breaks above the resistance level, it means that the buyers have taken control of the market. So the market will go to rally up. So what happened now? The resistance level will now become a support level, because price will now return back to retest that resistance level, which has automatically become a support level. The same thing applicable to the down. If the price goes down, breaks below the support level, it means that the sellers have defeated. The market is going to go down. So the market will now make a retracement back to the level to test the level before heading down. So that level will now automatically become a resistance level. Formerly it was a support level. So after the retest, it now became what? A resistance level. So these are how you can be able to trade using support and resistance level. So the best way to trade it is to look at key levels. So how do you look at key levels? When you open your price chart, you will see that there are so many points where price is reversing from. Let me give you an example. Now this is Euro USD. This is Euro USD and this is 15-minute time frame. Now let's zoom it a little. Now at the 15-minute time frame, this level will be working as a resistance level. And this level will be working as a support level. So now this is working as a resistance level, while this is working as the support level. But what I want you to know is that this cannot be a key level because this is a lower time frame, right? This cannot be a key level because price can easily break above this level or below this level, right? So what you are expected to do is to look at key levels. So how do you identify key levels? You simply move to a higher time frame. You can only use a higher time frame to identify key levels of support and resistance level. Then you cannot come down to the lower time frame and trade it, because when you come down to the lower time frame, it gives you a better risk reward ratio because your stop loss is going to be tight. So now if we move to a higher time frame like the 1 hour time frame in this scenario, you can clearly see the levels, right? So now at the higher time frame, we can clearly see that there is a level here, and there's also a level here. So now if the price breaks above this level, definitely the price is going to bounce off from this level, right? And if price breaks above this level, it's going to bounce up from this level. So this level and this level becomes a key level because they are levels that are identified at the higher time frame for day traders. But if you want a more stronger key levels, you can increase the time frame. This time around you can go to the 4 hour time frame. So let's go to the 4 hour time frame. Now we can clearly see that the strongest key level here is this level. So this level becomes the strongest key level, this level. This level becomes the strongest key level because this level is identified at the higher time frame. So now this one now becomes a strong key level. Because this level was identified at a higher time frame, right? So now if we go down to the lower time frame, if we go down to the, okay, let me adjust this. If we go down to the lower time frame like the 15-minute time frame, we can clearly say that this level and this level are the key levels, right? This level and this level are the key levels, right? So now we can now remove this one, and then remove this one. So we now make an adjustment and expand the chart a little. Now we'll make another adjustment. So now at the lower time frame, we have been able to identify a key level. So now the key level is this level and this level are the key levels, because this is the level where we identified at a higher time frame. So when you identify a level at a higher time frame, it becomes a key level, right? Because it took our time for this level to form, because it was a higher time frame, right? Because at the lower time frame, this level can easily be broken, the price can break above it, but this is going to be a strong key level. So that is why I say you have to identify an area of value, a key level of support and resistance level using the higher time frame. Then you can now come down to the lower time frame to trade it, right? So if you are a day trader, you can use the 4-hour time frame to identify key level of support and resistance, and you can now come down to the lower time frame and trade it profitably. So that is how you can trade these levels. We can also use the trend line as a support and resistance level if the market is in a trend. Have it at the back of your mind that the market moves in cycle. Sometimes the market can be in an uptrend, downtrend, or ranging, right? So if the market is in a range, right, in a range, the market will have series of highs and lows, right? So we have the swing high and the swing low where the market is reversing from, right? So they are visible before the eye. You can clearly see the resistance level and you can clearly see the support level, right? So at that period, you can use a horizontal line to do what? To draw those levels and trade them. Let me find an example for you guys so that you understand what I'm talking about. Let's go over to a 1-hour time frame and look for an example. Or let's look for another chart and see whether we can find an example there. Okay, let's use this for example. For instance, now this is a 1-hour time frame on USD JPY, right? So now you can clearly see that from this point to this point, the market was consolidating. You can simply use what? A horizontal line to connect the swing high, which is the key resistance level, and then use another line to connect the support level. So now you can clearly see that these are the key levels. So in this scenario, you don't need a trend line because these are key levels of support and resistance. So you can sell from the resistance and you can buy from the support unless the price is broken, right? So in this scenario, when the price goes up to the resistance level, you take a sell trade, and if price comes down to a support level, you take a buy trade, right? So in this scenario, you have to exercise patience, because in trading, patience play an important role. If you are patient enough, you'll be able to catch good movement in the market. So let's go back to Euro USD. Okay, so if the market is in a trend like uptrend or downtrend, you can use the moving average or the trend line as an area of value. So the moving average and the trend line will be acting as support and resistance level, right? So now if we go to indicator, we can easily plot out the moving average. Go to moving average exponential, click it once it appears, you can now do the setting. Set it to 20 EMA since the market is in a strong trend, and the method will be EMA, then 20 again. Then you increase the boldness so that it will be more visible. After that, you click OK. So if you watch from here, you can clearly see that the market is in an uptrend, and that is why the market is respecting the moving average. So each time price comes to the moving average, it gets rejected. Each time price comes to the moving average, it gets rejected. So this method is what we call the bounce, right? So the moving average is now acting as a support level. That is why when price comes to the moving average, it gets rejected. When price comes to the moving average, it gets rejected. So that becomes your area of value. So the moving average is where you are expected to place your buy trade. So when price comes to the moving average, you take a buy trade, and your stop loss will be below the moving average. If the price comes back again to the moving average, you take a buy trade, your stop loss will be below the moving average, and you can target the previous high, right? So in this scenario, the moving average should be acting as support and resistance level, but in the sense that where the moving average is not acting as a support and resistance, like in this scenario, you can see that the price is breaking below the moving average consistently. Then you can now include your trend line. So you use the trend line to connect the lows. Connect the lows. You connect the lows with a trend line. So you can now use your trend line as a support for the moving average. So in case if the price is not respecting or reacting to the moving average, the price can respect the trend line. So that is why you can either use the moving average as a key level of support and resistance, or you can use the trend line. So right now that the market is in an uptrend, we can either use the trend line or the moving average, right? But if the price is respecting the moving average, we can stick with the moving average. But in the sense where the price is breaking the moving average consistently and still going up, we can use the trend line. So the trend line becomes our backup. So that is why in a trending market, you use the moving average and the trend line as your support and resistance, because when the market is going up, the market sometimes hardly come to retest the horizontal level, right? Because the market is just going up, breaking series of resistance level, right? So what you do is this: if the market is in an uptrend, right, the market goes up, right, and then reverse and start going down. That point where the market reverses from, you use a horizontal line and map that point. Then you wait for the price to come back and break above that level. So if price eventually breaks above that level will now stand as a support level, because the price will come back to retest it. For instance, let's make an example here. For instance, now you can clearly see that the market is going up, up. And when the market got to this level, what happened? The market started making a retracement, right? So what you do is you look for a horizontal line and mark this level, right? You mark this level. This is the level. You mark it. So now you are waiting for price to come back and break above this level, because this level was a resistance level, because price came and got rejected, so it becomes a resistance level, right? This is an uptrend, example of an uptrend. So now you mark the level and then wait for the price to break above the level. So if the price eventually breaks above the level, this level now becomes an area of value for you, right? So you are now waiting for the price to come back and retest this level to take a buy trade. So you can clearly see that the price rallied all the way to this point, then came back and retested this level before heading up. There is another rule that I want you to understand about support and resistance. Support and resistance is not an exact line on a price chart. Support and resistance is an area on a price chart. So if you are waiting for a line, you will wait and you get tired of waiting. So if you look at this candlestick clearly, you see that it was unable to touch this line. You can see this line that we drew. It was unable to touch this line, but this place is an area, right? So if you are trading based on line and you are just waiting for the price to touch this line, or you place a pending buy order at this line, waiting for the price to touch this line before you take a buy trade, to your greatest surprise or disappointment, the price might not touch this line. The price will just go very close to the line and reverse and start heading up. So that is why you need to treat these levels as areas on a price chart and not just line, right? So once you draw your level here, your key level here, you wait for price to break above it, and once price breaks above it, it now becomes what? An area of value for you. It now becomes a support level for you. So what you are doing now, you are waiting for price to come back to that level for you to take a buy trade. So now if you watch, you see that the price eventually came back to the level and you took your buy trade. So you took your buy trade here, you took your buy trade somewhere here, and then you cannot target here as your stop loss, which is below the moving average, and then the swing high where the price reverses from can act as your take profit. So you can see that the price went up, break above the swing high and continue to go up. So in this scenario, you have taken your profit. I want you to understand something. Take note of this. Support and resistance level can be broken. Please take note of that. Don't think that because price is coming there and getting rejected, it cannot be broken. Definitely it will be broken, right? So you should be aware of that. That is why your stop loss is very, very important. Your stop loss is very important. So that is why if price eventually breaks the support level and hits your stop loss, you can wait for the price to retest that support level, which will automatically become a resistance level for you to take a sell trade, and by so doing you can recover your loss. And if price breaks above a resistance level and hits your stop loss, you have to wait for price to make a retest to that resistance level, which has automatically become a support level for you to take a buy trade. By so doing that, you can recover your loss. So that is why your stop loss is very, very important in the market. Very, very important, because it helps to protect your capital, helps to protect you in case if the market is misbehaving. So let me look at what we have treated so far in this video. We have looked at the meaning of support and resistance, right? And we are able to define what support and resistance is. Like I said, support and resistance are areas on a price chart where there is buy and selling pressure. So the support level is like a floor, while the resistance level is like a ceiling. So resistance level is when price goes up and reverse, while support level is when price dip down and reverse. So the point where the uptrend reverse becomes a resistance level, while the point where the downtrend reverse becomes a support level. After looking at the meaning of support and resistance, we now delve down to the secret rules of support and resistance level. So another rule is avoid drawing too many lines on a price chart because it is not going to be effective. So the first one, avoid drawing too many lines on a chart and only look for key level from higher time frame. So we use the example of 15-minute time frame in comparing to the 4-hour time frame, because at the 15-minute time frame you see so many levels, right? So you avoid those levels. Rather, let your level be drawn at the higher time frame for you to know where the market is actually heading to, because the lower time frame levels can easily be broken, right? So that is why you should avoid drawing too many lines, because if you draw support and resistance at the lower time frame, it will trigger you to have so many levels of support and resistance, right? Because at the 15-minute time frame, you see levels where the price is always reversing from. If you go up to the 30 minutes, you still see levels where the price is reversing from. So the same thing applicable to the 5 minutes, right? So if you are drawing your levels at the lower time frame, you will see that if you go to a higher time frame, you will see that you have drawn so many levels. So this time around, you become confused. You don't know which one is the key levels, and this will make your chart to be jam-packed with too many lines. So that is why the first secret rule of support and resistance level is to avoid drawing too many lines on a chart. Only look for key levels. And where do you find key levels? At the higher time frame. That is why I use the 4-hour time frame as an example. So the second one, we talked about support and resistance can be identified at the swing low and swing high. Like I told you, the swing high forms a resistance level while the swing low forms a support level. So the swing high and swing low can be used as an area where buyers and sellers are looking at. If price comes to the swing high, sellers will take a sell trade, and if price comes to the swing low, buyers will take a buy trade. So that is it. Then for a support level or resistance level to be strong, you must confirm multiple rejection at the key levels. So confirm multiple rejection at the key levels. That is why I say whenever price comes to a support level and reject many times, it becomes a strong level. But you must wait for the price to come and reject. Don't allow the price to be ranging at that key level, because if the price comes to a key level of support and began to range at that key level, that is touching it multiple times in a range, right, in a tight consolidation, there is a chance that the price can break above it. So what makes it a strong level is when the price comes there and then get rejected. That is deep down, right? If the price comes to the resistance level, it get rejected and then deep down. If it comes again, it get rejected and deep down, right? So there must be a distance. That distance is what makes it a strong level, because the sellers are very strong. That is why each time price comes there, they push it with full force. Each time price comes to the support, each time price comes to the resistance level, the sellers push it with full power, right? So not when, if price comes to a resistance level, it began to range and with a tight consolidation at the resistance level, forming what we call a build up, right? A build up at that resistance level. So once you see that, when you see a range like in form of a build up at a resistance level, and then the price is now testing the resistance level multiple times, there is 99% chance that the price can break above that resistance level. So for you to confirm a strong resistance level is when price comes there and get rejected sharply without making a range. So that is it. So the next one here, we look at price must move away from the swing low and swing high. Just what I've explained, price must move away quickly from the swing low and the swing high for you to confirm it as a strong support or resistance level, not when price is ranging at those levels. Then we'll talk about when a level of support is broken, it can become a resistance, and when a level of resistance is broken, it can become a support. So I told you that when price breaks above a resistance level, that resistance level automatically becomes a support level, and when price breaks below a support level, that support level will automatically become a resistance level, because price will definitely test those levels before the movement continue. So have that at the back of your mind. Then we now talk about treating support and resistance level as an area on a price chart. That is to say, treat support and resistance level as area on a price chart and not just line. Like the example I gave you, don't treat support and resistance as an exact line, the line that you draw with your horizontal line. Don't treat it as a line, treat it as an area on a price chart, because if you treat it as just a line, a single line drawn on a chart, price cannot touch that line. Price can come close to that line and reverse and start going up, and you are going to miss that trade. So it becomes a missed opportunity. And you know what happens when you miss a trade? You become angry, resentment, anger, annoyance, and so on and so forth will fill your heart. So to avoid that, you have to treat a level as an area, not just a line. So once you see that the price is already at an area of resistance, you take a sell trade. So don't wait for the line that you draw for price to touch it. Just when you see that the price is already at the area of resistance, you take a sell trade. And if you see that price is at an area of support, you take a buy trade. So you don't wait for the line that you draw to be touched for you to take trade. So after that, we now look at the moving average. So you can use moving average as support and resistance in a trend. So you can use the moving average as what? As a dynamic support and resistance level during a trending market. You can use it during an uptrend as what? A support level. You can use it during a downtrend as a resistance level. So the moving average can be used as a dynamic support and resistance level. So if price is going down, you can plot your moving average and wait for price to make a retracement to the moving average. If price comes there, you take a sell trade. And if price is going up, you plot out your moving average and you wait for price to make a retracement to the moving average. If price makes a retracement to the moving average, you take a buy trade. So in this scenario, the moving average is acting as what? As a support and resistance level for you. So have it at the mind that if the price eventually breaks above the moving average, it means a new uptrend has begun. And if price breaks below the moving average, it means a new downtrend has begun. And also talk about supplementing the moving average with a trend line, because sometimes price can break below the moving average and still get rejected, right? So the trend line will now be a backup for you in case if price breaks below the moving average, the trend line can hold on to the price, right? So that is why you also need a trend line. So a trend line can be used during a trending market, right? If the market is in an uptrend, the trend line will work as a support level, and if the market is in a downtrend, the trend line will work as a resistance level. So what you have to do is, once you plot the trend line at the lows, so you wait for 2, 3 pullback. If you wait for 2 or 3 pullback, right, you use your trend line to connect the lows right? There should be 3 or 2 pullback. Then use your trend line and connect the lows, right? So each time price makes a pullback to the trend line, you take a buy trade in case if the market is in an uptrend. But if the market is in a downtrend, if price makes a pullback to the trend line, you take a sell trade, right? So the trend line will also act as an area of support and resistance during a trending market. So we now talk about the horizontal line of support and resistance. Like the horizontal line works extremely well when the market is ranging, because in that scenario you can easily identify the highs and the lows. But if the market is trending, you can use the trend line and the moving average, because in a trending market, the market hardly come back to the horizontal level, right? So if there is a horizontal level, if the market is going up and the market has traveled so far, it will be difficult for the market to come back to retest that level. Instead, the market will be forming new levels and be breaking it, right? So I gave you an example in the sense that if the market is heading up, when the market makes a pullback to test a support level, right, the level where the market makes a pullback becomes an area. So you use that horizontal line and draw that level where the market makes a pullback and wait for the market to break above that level that you have drawn. So if the market eventually breaks above that level that you have drawn, you now exercise patience and wait for it to make a retracement, that is to come and retest that level, right? So before, the level was a resistance level and now the level is about to become a support level. So once the market comes back to that level, you cannot take a buy trade, and that is it. So in an uptrend, price is always going up, breaking resistance level, and if the market is in a downtrend, the market will just be going down, breaking support level. So the best thing you can do is to use a moving average or a trend line, and it will act as your area of value where you take trades if price makes a retracement to this level. Then when you are trading, make sure that your entry is at an area of value, right? If the market is in an uptrend, make sure that you enter the market at a support level. So a support level should be where you must enter the market, right? So that is where I said you must enter your market at a support level if the market is going up, and if the market is going down, you must enter your trade at a resistance level, right? So you place your stop loss below the support level if the market is in an uptrend, and you place your stop loss above the resistance level if the market is in a downtrend. So we have treated that. So here you said you can place your place your stop loss above resistance and below support. So if the market is in an uptrend, your stop loss must be below support level. So when you enter at the support level, then your stop loss must be below the support level. And if the market is in a downtrend, you enter at the resistance level, then your stop loss must be above the resistance level. Then before you enter, there must be a confirmation for your entry. We call it the entry trigger. So what will now act as your confirmation? The candlestick pattern. The candlestick pattern will act as your confirmation. So candlestick pattern will now act as a confirmation for your entry. So once it comes and form, you take action. If the market is in an uptrend and the price makes a retracement to a support level, you wait for a bullish reversal candlestick to form, like a hammer, a bullish engulfing pattern, or a morning star. So once this bullish reversal candlestick pattern forms, you cannot take a buy trade. Your stop loss will now be below the support level, and your take profit will be at the previous swing high. If the market is in a downtrend, you wait for the price to make a retracement to the resistance level, and once the price does that, you wait for a confirmation, a candlestick pattern. So what you are waiting for right now is a bearish reversal candlestick pattern. So a bearish reversal candlestick pattern is a shooting star, a bearish engulfing pattern, or an evening star. So these are the candlestick pattern that you have to wait to form at the resistance level for you to take a sell trade. And then when you take a sell trade, after the formation of that candlestick, your stop loss must be above the resistance level, and your take profit must be at the previous swing low. So this is how you trade using support and resistance trading strategy. I believe you have found some value in this video. I believe you have learned a lot in this video. If you do, please give us a thumbs up. So this is where we come to the end of today's video. If you like this video, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I'll try as much as possible to be publishing my content at 6 o'clock p.m. West African time. So these are the times that you should be expecting new videos to drop on YouTube. I post video every day, and the time that I normally publish my video will be at 6 o'clock p.m. West African time. So take note of that. That is when I will be publishing my new update. You can go to the community post and you will see the advert of the time that my new update will be dropping. So try and subscribe to my channel so that you'll be the first to be notified whenever I drop new content. As you all know, this is an educative content and we talk about forex trading. So ladies and gentlemen, that is all I have for you in today's video. Don't forget to like this video, share this video, comment your thoughts and opinion below this video, and subscribe to this channel and come back for more. So thank you once more. I appreciate. I will see you again in my next update. Enjoy the rest of your day. Goodbye.